Let's talk about how HPCL's performance was. Let's welcome on board Rajneesh Narang, the Director of Finance and CFO at Hindustan Petroleum Corporation, joining in on the show right now. Mr. Narang, great to have you today on ET Now. Thank you so much for taking the time out. One can see that you've posted extremely strong GRMs, and that perhaps is one key reason for the outperformance that you've seen in fourth quarter. But I wanted to understand how sustainable is this, given that Singapore GRMs have come off?
Yeah, good morning, first of all, to everyone. Yes, this quarter rather has been an excellent quarter for HPCL, both in terms of physical as well as the financial performance. This was the quarter where we got the highest refining margins, the marketing margins were better, and in terms of physical performance, the refinery throughput was highest, and in the overall also we made the highest throughput. And the pipeline throughput was also the highest. Coming to your question regarding the refining margins, yes, the refining cracks have come down a bit, but that has enabled us to partially compensate on the marketing front. Yes, the refining margins do have, the GRMs have come down, but we feel that the current level of GRMs which we are making out right now in this, what we had in the last quarter, would continue in the near future also.
Sure. One thing that I wanted to understand was currently how much of Russian crude is HPCL importing, and at how much of a discount is it getting imported?
Yes, we are importing Russian crude to the extent that the same can be processed in our refineries, considering the configuration which we are having. As regards the discount level keeps on changing. It depends upon the availability of the crude and the number of players who are in the market. So we get a decent discount, that's what I can say. And all that also adds to the GRMs of the refineries.
Mr. Narang, morning. Now, the government had announced close to a 30,000 crore rupee capital support to OMCs in the FY24 budget, but the timing, the quantum, modalities, etc., that remains unclear. Can you share any details that you have on the same? And, if you could just walk us through any perspective that you've garnered in terms of communication?
Yeah, in the budget document, the government has declared that there would be a 30,000 crore capital support to the oil marketing companies. And this capital support was primarily for three reasons. One was the energy transition, net zero, and the green initiatives which these oil companies will have to undergo. So currently, we have not got any confirmation as to in what form and shape the compensation would be given. But yes, we are under discussion with the ministry, and what are the projects and all which we will have to execute under these categories. Those elements are being discussed with the ministry right now.
And also, HPCL announced a spin-off of the lubricant business with plans for value unlocking. If you could just give us some more details regarding the revenue, EBITDA, etc., from the lubricant business and any sort of valuations that you're looking at?
When this lubricant business is housed within HPCL, what we feel is that the HPCL is not getting the full value out of it. So that's primarily the reason. If you see HPCL, currently the EBITDA multiples which we get is around 5 to 5.5. But the lubricant market, the levels of market share we have and the EBITDA margins which we make, we feel that we should be getting around 10 to 12 multiple of the EBITDA over there. So considering that, we feel that the company's valuation should not be less than 12,000 crore as regards if we carve out the lubricant business.
Are you looking to list it separately then, Mr. Narang?
Can you just repeat, please?
I was wondering whether you're looking at listing the lubricant business separately.
We will be evaluating all the options and once we get all the regulatory approvals. But definitely, yes, there is a merit in looking at all the options through which we can maximize the value unlocking in this company.
That's great. You think it's a possibility it could happen within this financial year?
We intend to do it by the end of this financial year.
That's
We
great.
intend to do it by end of this financial year. Maybe depends upon the regulatory approvals also.
Right. I was also looking at, the fact that the government has announced about 3,000 crore rupees as capital support to the OMCs. Aside of that, also wanted to understand, in lieu of what you just talked about with regards to your lubricant business, whether HPCL is consolidating the renewable and new energy linked businesses. And if you could share some details regarding the same, what could be the rationale behind this? Will you be looking at a fundraise in this particular unit, if at all?
Yeah, along with the lubricant business, we had also come out with we got the board approval for setting up a new wholly owned subsidiary for our green initiatives. HPCL has exhaustive plans as regard the green portfolio is concerned, both in terms of renewables, in terms of biofuels, and in the near future, maybe green hydrogen and other initiatives which we would like to unfold. Now, coming to the funding and the capital structure of that company, definitely what we feel is we'll be able to raise the money at a far finer rate than what we are currently once we say that the green company is set up. And in near future, when the company is there, definitely we'll be raising market, and if need be, we'll also tap the market.
Next question is that I want to understand a very basic question.
Yeah.
One for the consumer and second for the shareholder. Which one should I ask you first?
Anyway, I'm there to answer both. So
Okay,
your choice.
The shareholder.
Yeah.
At the current prices of oil, what is your retail spread?
At the current levels, I can say that we are having a very decent level of margins, marketing margins. And I hope that the crude prices as well as the product cracks will remain at the current levels. I'm not looking at expecting that the prices will go up as regard the crude is concerned beyond 75 to 80 range. And at that levels and at the current RSPs, we are making healthy margins in the retail front.
Historically, it's been about 3 to 3.5 rupees. Is it higher than the historical average?
Yeah, one has to look at an integrated level. That is the way we have been operating in the entire last year. And if you look at the integrated level right now, the refining margins are a bit lower. They have come down. And on an overall basis, I can say that our margins are healthy.
Next question is for consumers. At what point of time do you think the crude price cut will be passed on? Where that 15-day calculation, which currently is not being adopted, will come back into play.
See, the crude as well as the product cracks has been quite volatile. Only a few days back, maybe 15 days back, the crude prices were hovering around $85, $87 a barrel. They have come down, and depending upon the geopolitical situation, it can any moment jump up and further increase. So we are closely monitoring the levels of the crude as well as the product cracks, and at an appropriate time, definitely the decision will be taken.
What you're telling us right now, there are no indications or intentions to cut the fuel retail prices.
I said no, it depends upon how the market behaves. The market has been quite volatile. Let some stability come as regards the product as well as the crude prices. Definitely we'll have a look at that moment of time and take the decision.
My final question, again, I go back to from shareholder to consumer, back to shareholder, and last question. So will FY24, if all things equal, which is if the current prices they continue where they are plus minus 5%, if the currency stays where it is plus minus 1 or 2%, is HPCL in for a bumper year of profits? Because that will what will happen, because margins and demand, they've gone higher, GRMs have stabilized. So whatever you lost out in 2023 because of war, 2024 you would be in for a bumper year.
No, that would be primarily for several reasons, not only regarding the prices are concerned, but also that all the investment which HPCL has made, they have started now giving us the returns. Like last year, our Mumbai refinery got commissioned. We got the additional 2 million metric ton from the refinery. We also capitalized or completed two of our pipelines, major pipelines, like one LPG pipeline from Hassan to Challapalli, and another from Vijayawada to Dharmapuri. And in the month of March, in case of Vizag refinery, the CDU4 has got commissioned. So all these will also bring incremental revenues to us as well as the profits. So I feel that yes, if everything goes well and the current level of margin sustained, we'll have a good.
Appreciate your time. Thank you so much for joining in, Mr. Narang, and giving us more clarity.